going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're doing great today. It is the weekend, so things can get a little bit crazy, but essentially, this is how we ended the week for Bitcoin. We had this massive fake out. We saw stocks crashing, Bitcoin crashed, we saw the Fed raising rates, and apparently Mercury's going into retrograde in 3 days. I'm not really sure what that means, but a lot of people think that's just bad overall. Totally kidding. Obviously, we're just having fun on this channel, but in all sincerity, guys, things have been looking quite ugly for Bitcoin, for stocks, for everything all around. Sentiment is down. Lots of people have left the space. And in today's video, I want to go over something incredibly important. Also, side note, one of the biggest Bitcoin bears, Bitcoin haters of all time, potentially just had something kind of bullish to say for Bitcoin. So what does that mean? On top of the fact that the IMF have basically bribed Argentina with $45 million essentially to not allow cryptocurrencies in their country at a time that they need it the most. So what does this all mean for Bitcoin? Well, guys, in today's video, I'm going to kindly ask you to stick around because it is time for us to buckle down, look at the hard truth, and pay attention to what is happening right now in Bitcoin. And I am going to show you the most important, the most comprehensive chart of the most important levels to pay attention to. We've gone over this before, but it's time to break out the big guns because things are getting serious. So make sure you stick around. And also, in a video that I put out, I believe it was a week ago, we were talking about passive income, ways to make money in crypto, even during bear markets, sideways trends, right? When not a lot of coins are pumping. So there is another opportunity, and it's virtually risk-free. So if you guys are interested, make sure you stick around to the very end of the video where I will go over that, as well as the short-term price predictions as well. But as I said, you are not going to want to miss today's videos. So if you're not subscribed, what are you waiting for, guys? One of the few channels still making videos in these terrible markets. Without further ado, let's dive in. So before we even get into the chart, before we look at any crazy things happening right now, ultimately, what do you see, guys? You see a massive dump, a rejection, and look at this down here, guys. We really didn't get that bounce. We didn't get that V-shaped recovery. In fact, we're still just kind of trending lower. Now, a lot of people might say, well, this is what's supposed to happen at capitulation. This is what's supposed to happen. We're supposed to feel terrible, feel like there's no chance of the price ever coming back, and then boom, it just pops to the upside, right? Well, things are a little bit different, right? The last time that we had a very similar situation to what we're having right now, we did not have all of this Fed tightening and hawkish stance. In fact, we had rampant money printing. We had stimulus checks going out, right? It was a little bit of a different environment. We have to take that with a grain of salt. But what you could see right here is, and this is for my short-term traders out there, but today's video, we are focusing on the bigger picture. But just for those out there that want to look at the short term, we have in fact broken this structure. And as far as candles are concerned on the daily, we have actually put in a lower low. Right here, we had this low, and here we actually have a lower low. Now, obviously, you could argue, well, we did have the wick down here. That's true. I will take that with a grain of salt. But the thing is if we do look at that level, that's sitting at around $34,500. And considering that we didn't even get a bounce up here, we didn't even try to break this resistance, it's not unfortunately showing a lot of strength. And I know you guys don't want to hear this. I'm just telling you what I'm seeing on the charts. It's not my opinion. This is just what the charts are telling me. There is that potential that we could come down here to around $34,461 lining up with this. But as I said, the longer we kind of stretch out without seeing that crazy volatility, it does make the more likelihood of doing that perfect sort of double bottom down here at around 33,000, right? Now, 33,000 is a very critical level for Bitcoin. We will talk about that a little bit more. However, something just to point out real quick before we get back into the charts is that according to Glassnode data, the MVRV, or the market value to realized value ratio, is around 1.55. And you could see it's getting into these lower levels. Since the Bitcoin ratio is closer to the lower side of the range, it is depicting a strong indication that Bitcoin is in a bear market and further indicates that Bitcoin is being held at a loss at this moment. They say the current MVRV ratio also acts as a strong indicator of market capitulation. Now, that was another question that people had asked me in my video from 2 days ago, and it was, are we in capitulation? Is this capitulation? Well, from my experience, the 6 years that I've been spending in just mostly Bitcoin, I'm not talking about traditional charts, No, this is not full capitulation, in my opinion. This is, sad sentiment, people being upset. Capitulation is a lot worse than this, and I think you'll know if we hit that true capitulation, right? But without talking about all the negatives, because everywhere you go, everyone's talking about negative, charts, negative outcomes, bearish price targets of like $10,000 Bitcoin, right? Will that happen? Well, why don't we have a look at the data and see what could happen? Now, the first thing to point out is a lot of people mention that this area right here for Bitcoin, when we actually had, this is actually more of a capitulation right here, if you really want to point it out. Something like that, even though it wasn't full on, but that was more similar to capitulation than what we're seeing right now. But essentially they're saying that, this is the same as this. Well, there is a lot difference in the structure, right? Whereas this was trending downwards like this is trending upwards, or at least it was until we broke the trend. But also we have a very different geopolitical condition happening right now, right? But as I pointed out, we were looking for volatility. I told you that these Bollinger Bands were getting very tight. Now, the one thing that we can point out similarity is that we were sitting below this basis, which is this middle pink trend right here. You can see over here, if I'm not in the way, that we are trending below it. And we also had this violent move. And guys, I put out a video, where was it? Back here. I said Bitcoin flashes violent signal, okay? Violent, that's what I was talking about. So getting back to the chart right here, you could see that we came down, we fell completely out of the Bollinger Bands on the daily, and we did have a violent down and violent up, right? We had a little bit of a, drawdown here, but ultimately that was a trend going to the upside. Same thing is happening right now, guys, where we had that violent fake out to the downside, right? We're sitting below the basis here. We're sitting below the outside of the lower bands. And if history was to repeat, then yes, eventually, within a day or two, maybe even a week, you would be looking for a break to the upside. Now, should we even be so bullish though in a time like this? So short term, just again for my traders, guys, looking down here, we do have this very critical level at 34,700. The reason that I got this level is because right here, you can see this is where we hit for the first time. We had some resistance when we had the crazy parabolic run. You can see this area right here flipping a lot of resistance support. And you can also see down here that the first time we fell, that's where we put this bigger candle body right above it. So ultimately you are looking at this range of 34,000 to 34,700, sort of where Bitcoin could potentially be headed in the short term. But super simple, and this is not on the log chart, this is on the linear chart, guys. Very, very simple here. So we have this top trend right here. This is the top, right? If we just, kind of get rid of this little wick right here, just sort of go from that top first wick to right here where we had the solid candle close. And going back here, I drew two trend lines. You guys have seen this, right? This was the top of the 2017 run, and this was sort of that mid-cycle run right here that happened in June 19th. And all I did was I just extended this to the first point of contact, which is right here for the green and right here for the purple. Now, we did have a nice intersection right here. So that was two potential supports, right? Which is why we probably did have the structure being built right here. However, over here, you're noticing that these two areas, they've started to diverge. The two trend lines, right? They're actually going in opposite directions, whereas now you can actually see that the green, which is the one way back here from 20K, is actually a little bit lower. So right now, we are still on the macro, on the weekly, despite all the bearishness, despite everything that's been going on, we are still putting in higher lows. Now, it doesn't matter how you look at it. Traditional books, traditional trading, traditional analysis will tell you this is a good thing, right? And this is not something that's just happened over the past few weeks. This is something that's been happening for over a year and 4 months. But if, worst case scenario, we were to break down to that level, you could see us come down to that $31,000 area. Now, that would be a very dangerous area for Bitcoin to be because there's not much support right here, right? So that's where you get a lot of these people coming in saying that they're scared, saying we're going to go to sub $20,000 Bitcoin. Well, I'm going to get to that in just a second. Now, one of my favorite Twitter accounts to follow is definitely Velvet, 888 Velvet. You can definitely check him out. I highly recommend his analysis. He had pointed out this possibility of a running connection as the fourth wave of an impulse wave. And if you look at this giant market structure from Bitcoin 2017 bull run, consolidating into the giant bear market of 2018 into 2019's fake out and down again, you essentially have the entire market of 2017 to 2019 being this wave 3. Now we're doing the sideways chop. I don't know if you guys could see this, the sideways chop right here. And then eventually, once you build enough structure on that base, you are looking for the next move to the upside. So why don't we just have a look at the data? Let's truly see what Bitcoin has done, right? So right here, I am pulling up the BLX chart. Now, keep in mind, this chart is a day behind. Doesn't matter. Today's price has no effect on what we're talking about today. This is long-term history of Bitcoin. Now, the thing that scared us the most right here is that we are in fact, and not only are we sitting below it, but we actually got rejected right here, guys. You can see right here, we attempted to breach it. We got rejected by the 600 daily, right? And that is a big, big problem because in the past, when we do tend to get rejected off of these levels, we do have these massive dumps. We've established that, right? That is the bearish case. So why don't we just simply have a look at all three of Bitcoin's tops? So far, people are saying this was the top for Bitcoin. It didn't look like a previous cycle. We didn't have a blow off, right? Could history be different? Fine. But right here, we have, bull market top one in June of 2011. I'm sorry, 2003, right? No, Bitcoin wasn't even around then. We did have a top right here. This was in November of 2013. And of course, the infamous top of 2017, right? So these are our three clear, distinct tops. We don't know if what we're seeing is a top yet. Some people are speculating that. We don't know. There's not enough data. It's just people guessing. What do you notice right off the bat? Every single time Bitcoin has ever gotten to an all-time high, we never, ever retraced and touched those levels again. Look, right here, once Bitcoin got up, right, to that $11,080 level, we retraced down $163. We never came down to this level again. We never saw a $31 Bitcoin again, right? $31 Bitcoin. Can you imagine? My goodness. So then here we have this around, 11, did I say 11,000? I meant to say 1,180. Little confusing, guys. It's been a rough week for me. It's also been raining every day and I can't get anything done around the house, but that's a side note. Getting back to this 2017 high, right? $20,000, right? Right here. Now look at this, guys. On the way up, we did have a little bit of resistance right there, right? It was a very psychological level to break through. However, we broke through it with no problem, no ease at all. And once again, my question is, do you honestly think that this price is going to come all the way back down to this level right here when Bitcoin has never, ever done that in its history, right? That's the first thing. Now, I understand, okay, things are different. Bitcoin's never really been in a recession. Okay, fair enough. Let's look at a little bit more data. Let's get a little bit more technical here. This is one of my favorite things to pull out, and this is the Fibonacci retracement, right? So essentially what you do is you go from the top right here, you take the top, you draw it all the way down to the bottom right here, right? And I'm going to extend this out just so that we could see it. And, so we're going from the top to the bottom and we plot that, right? What do you notice right here? You notice that during these Bitcoin trends, what do? We come down and you see these lines, they represent different fibs. You have 2.618, you have 3.618, and you have 1.618 right here. So this blue level right here represents the 1.618. Look at what Bitcoin did. It came down here in 2013, perfectly touched that level. We did not go down to the previous highs. We did not go that low. We touched the 1.618 and then we continued to the upside, right? So that's our first point of data. Let's keep on moving, but let's keep the rainbow chart here just so we can see, just so we can compare, right? So let's do it again. Let's draw it from here. This is the 2013 top, and I'm going to extend this out obviously so that we can see. So we go here to, and these are rough numbers, but you can understand like essentially what we're talking here. Drag this out, right? We go down to the bottom right here, right? Okay, boom. So what can we see? Number one, we never came down. We never retested the previous all-time high, which in our case would be 20K, saying that we shouldn't go down and retest 20K. And coming back up here, what did we do? Oh my goodness, guys, look at this. We had this sort of mid-rally correction. And look where we came down, guys, exactly to the 1.618 fib level. We never went back down to the previous all-time high. This is not my opinion. This is not me being over bullish or bearish. This is the charts. I want to share this information with you so that you can make a decision, an educated decision based on just what we're seeing. Let's take this a step farther. Let's go even more, okay? Let's go from the 2017 all-time high right here, right? So we take this, we extend it out, we draw it all the way down to the bottom. And what are we seeing, guys? Yet again, zooming in. Now, okay, there were like a few little wicks down here that kind of freaked people out, but ultimately the candle bodies of the close, what have we had? 1.618. We actually had multiple tests of the 1.618. Funny how every single time we get down to this 1.618, we have a massive rally. So does this mean that Bitcoin could make another attempt back down to that sort of $30,000 level? It's possible, right? It did it 2 times here, never did that before. So never say that nothing can ever happen. You don't want to talk in absolutes, but ultimately we had the bounce there the same way that we had, this bounce back here on the 1.618. We had the bounce right here on the 1.618. Sorry, guys, I went ahead. I jumped ahead. We had this back here. We had this up here. And we've also had this right here. So every single time, Bitcoin has always done this, right? Now, you might be saying to yourself, well, what about what happened when we had the mid-cycle rally, right? Let's get rid of, you guys saw that, right? I can get rid of all this. So the only exception you can put to the rule, this is maybe the only exception, is right here, we had this mid-cycle rally, right? And that's when Bitcoin got up to around $262. So let's just add this in there. I want to play devil's advocate, right? So in this case right here, then yes, Bitcoin actually did trend below it, right? So is that a possibility that we could be forming some type of a mid-cycle correction? It is possible. But if this is a mid-cycle correction, just like this was here, then still it never went below the previous high, right? So that is just something that I want to point out. So it is a possibility. And also, by the way, guys, the structures are much different, just throwing it out. This had some crazy volatility wick to the, I mean, literally in, just a few days. Let me get my my measurement tool out here. Where the hell is it? Here we go. Just a few days, Bitcoin fell 81%. And, this was like a little mini bear market. This went for, how many days did this go for? 69 bars? 207 days roughly, right? But the point being is that this is absolutely nothing like what we're seeing right here. If you have a look at just look at it with your eyes, guys. Look at this, okay? And look at this right here. So really, this right here, okay, this mid-cycle rally is more similar to what we had, sort of something right here, right? But I do not believe that we have had the blow off top yet, because although it does look similar, the 4-year cycle, remember that the Bitcoin halving is not as significant as it used to be. And there might be some Bitcoin maximalists that get mad at me for saying this, but it just isn't, guys. Back here when we cut from 50 to 25, that was pretty significant. Even 25 to 12.5 is pretty significant. But now we're getting down to these levels, 3 point something, 1.5, whatever something. Is that really as significant, right? We're already having the inflation rate drop into 1% roughly on the next halving. Not much significant change is going to really happen after that. So that is just something that I wanted to point out, guys. I wanted to break it down simple, and I'm not trying to be a Bitcoin bull. I'm not saying that there couldn't be some more pain in the markets. I'm just saying historically, Bitcoin has never gone below its previous all-time high, okay, from the blow-off tops. And also, we've never seen a retracement below the 1.618 ever in Bitcoin's history. Ever, over 13 years. So I'm not saying it can't happen today. I just want to point out that the likelihood of the probability of that happening is not very probable. That's what I wanted to break down to you guys today. Now, Peter Schiff, you guys know he's probably the biggest Bitcoin bear there is out there. He's a gold bug till he dies, gold to the moon, which, by the way, guys, gold isn't even performing that well. If you actually look at gold is getting hit just as much as everything else. So I don't really understand this whole gold is a safe haven. So over the course of Bitcoin's 13 years of existence, I don't even know. I think somebody actually in the comments down here, yeah, here you go. Invest answers. 4,000 days, 11 years, gold up 1%, down 44% when you account for U.S. debasement. Bitcoin, well, I don't even have to say. Just look at that, guys. But anyway, so what did Peter Schiff say here? So he said, it's curious that Bitcoin has held up so well around the 30K level. My guess is that there is a concerted effort by large holders to prop up the price. Judging by the continued carnage in every stock related to crypto, perhaps whales are selling those stocks to buy more Bitcoin. Now, I know specifically he might be talking about just crypto-related stocks in general, but it does make you wonder, are traditional traders and investors moving into the crypto space? Now, despite these terrible, although I don't really know, because usually when he puts out something bearish, usually that's your long, long it, right? In this case, I don't really know, what this means. This is kind of bullish, but, this could be a possibility. And even like we had seen with Paul Tudor Jones, he was saying, get out of stocks, get out of these things. And crypto, he was talking about actually putting in an allocation to that, right? So very, very interesting looking at this moving forward. Now, I do want to talk about what is going on in Argentina. Now, we do know that these are obviously one of the countries that could certainly benefit the most from crypto. Well, it turns out that their bank released a statement on Thursday saying that the country's financial sector is not allowed to provide services related to digital assets that are not regulated. This effectively bans any crypto transactions within the official economy. So this is the crazy part. The move comes just days after Banco Galicia and Burbank SAU, the two largest private banks by market value in the Argentinian state, announced letting their customers purchase cryptocurrencies. So they put the statement out. 2 days later, they basically completely backtrack on it. And why did this happen? Well, the country has decided to discourage the use of cryptocurrencies after the International Monetary Fund, or our good old friends, the IMF, approved a $45 billion loan. They're basically, essentially bribing them. It's bribery. How is that not bribery, right? The move comes about a month after the IMF said that it would give the country a loan of $45 billion. The agreement requires the country to discourage the use of cryptocurrencies in order to protect its financial sector. The letter of intent contains an outline of Argentina's commitment to the deal, addressed with the IMF stating, to further safeguard financial stability, we are taking important steps to discourage the use of cryptocurrencies with a view to prevent money laundering, informality, and disintermediation to strengthen the country's financial resilience. So they want to fight money laundering, but essentially you're bribing a country who you know is desperate for the funds, and you include a clause that says that they can't actually, get involved with crypto. Are you seeing the picture here, guys? It sounds to me like they're pretty scared. I mean, why would the IMF just come out and just be like, oh, here you go, guys. Here's just like $46 billion, because we really care about you. We really, truly care about you. Sure about that? Or are you just afraid of the dominoes lining up, of the dominoes falling? El Salvador, Central African Republic, right? Just saying, guys, sounds to me like they are scared, and that is how I take this. Like Brian Solston said, IMF and central banks are the gangster banksters. As Senator Solston, I will end Bitcoin prohibition. So check this guy out for U.S. Senate candidate. Sounds like he would be definitely on our side. But essentially, guys, that is what I want to talk about. I wanted to talk about, obviously, the fact that Bitcoin, just statistically, according to the data, has never gone below the highs. We've already touched the 1.618. So very, very important things to pay attention to. And now you're starting to see the IMF scared, bribing countries, okay? Crazy. So this is what I wanted to talk about today. This is the potential opportunity. So you guys may have heard about PalmSwap. If you don't know about PalmSwap, you're probably going to know about it a lot soon. So essentially, these guys are doing decentralized perpetuals. So if you're trading over on Bybit or Femex or Prime XBT or something like that, they're doing the same exact concept, but they're doing it on chain. They're doing it decentralized, okay? So this is definitely not the first. We've seen some people do this, but there are some major advantages to doing this, and the token actually has a pretty good utility, which I'll get into in just a bit. So some of the things that, are great about this is, number one, they're actually right now using Binance Smart Chain specifically, but they're looking to be multi-protocol. So obviously, you know how I feel about this when it comes to interoperability, etc. So fully on-chain, and they have different order types. Now, currently, even if you're just doing spot buying, for example, over on Uniswap, it's basically just this very simplified, you swap for this, for that. There's some slippage, and you usually never get the exact amount that you're trying to do. There are no other types of orders that you can do, but it's those orders that most traders use. You have limits, you have conditional, you have trailing stop loss, right? These are things you can do on Binance. You can do on all these other exchanges. You can't really do it on a lot of the decentralized exchanges. These guys are doing it, and they're offering super deep liquidity. And they're also saying that they're going to offer up to 50x leverage, which I do not recommend you use 50x. That's absolutely crazy. But hey, if you want, they're offering it. And the cool thing is, one thing that their token is doing is they're having a deflationary model. Now, this isn't just like a deflationary model just for like, oh, if I send it and it burns it. I mean, then that just kind of incentivizes people to what? Just send tokens around? No, this is basically on trades. So people are going to be trading. They're going to be using this platform. I mean, hopefully they do, right? If they want to do it in a decentralized manner. So not saying run out, buy the token. In fact, you can't, because there is no token right now. But the fact that it is deflationary, and there will be burns on every trade, and they're going to introduce other deflationary mechanisms over time, could actually give a lot of value to the tokens. Now, the reason that I'm bringing this up is because this was tweeted over on April 28th, and they said, did you know that PalmSwap is going to distribute 500,000 Palm tokens to winners at the trading competition on the testnet? So they are going to be announcing this very, very, very soon. Pay close attention to it. Now, if you go over here, you can see that the test net is already live. So you can go over there, you can practice trading up to 10x, and you don't have to use any real money. That's the point I'm trying to make. You go over there, use it, try it out, use completely fake tokens, right? They don't mean anything. You're just going to practice trading. And what are they doing? Well, this is directly over here from their website. You can go to the documents right here. Click on documentation. It takes you over here. You come down to retroactive trading. Now, they haven't released this yet officially, but it is in the documents. So check this out. It says PalmSwap will launch without a public sale. Instead, early traders on the protocol will receive the tokens for free. 4% of the total token supply will be distributed to early traders on the protocol based on their trading volume. To claim tokens, users must trade on the PalmSwap exchange in the first 30 days after launch on the BSC mainnet, right? The PalmSwap protocol should be managed by its users, so we believe it's more compelling to reward early protocol adopters with a snapshot rather than selling Palm tokens to non-platform users through a public sale and giving them voting rights. So this is why you have to pay attention to what they're going to be doing after connecting your wallet to the platform, your estimated Palm token allocation based on user-specific volumes, et cetera, et cetera. But there is something that is more incredible, which is the fact that right now they are offering a test net competition opportunity for you to get free tokens. So when people tell me that there's no opportunities in these types of markets, you can do this virtually risk-free with fake tokens and be rewarded real actual tokens on the token generation event. Now, the reason that I'm bringing this up to you is because it's not going out and buying a token when it's on exchanges, right? You buy it 10 cents, it falls to 2 cents, you lose your money, right? These are free tokens. So even if the price miraculously crashes 90%, whatever, okay, sucks, but it was free. It was absolutely free. You didn't have to do anything for it. So definitely check that out. And for those of you who follow me over on Twitter, you will know that I actually have spoken to these guys. This announcement actually came out on February 2nd. I was a little quiet and hesitant because I was waiting for, the big news to come out, but I do like the fair distribution, the way that they're doing it, and they're encouraging governance and giving tokens to people who actually use it. Sort of similar to how Uniswap airdropped it to all of their users, right? So that is an opportunity. Go follow PalmSwap. Over on Twitter, it's PalmSwap.org. Like I said, opportunity could be coming up, in a few days. I don't know when they're going to make the official announcement, but free tokens. There you go. You guys always want to ask. You always ask me how to make money, how to get free tokens, how to do very risk-free, things during these bear trends. Well, that's an opportunity, guys. So, ending on some good news today. We have the first ever Portuguese real estate purchase has been settled for Bitcoin without involving a conversion back to fiat money. The deal was for a T3 apartment in Braga, costing the buyer exactly 3 Bitcoin, about 102,000 euros or $108,000 at current prices. Now, I have not seen a picture of this house. I don't know what this house looks like. $108,000 though? Not bad. Not bad compared to the real estate bubble that we're having here in the US, right? So ultimately, guys, that is what I'm looking for. Keep in mind, though, it is the weekend. Weekend trading gets very crazy. And, the other thing, just super quick to point out, look at this volume. Look at this volume. Where's the volume here, guys? Where is the volume? Where is the volume? We did not get the volume on the move, which is why I'm not confident on it. Maybe if we come down here, we could have one of those quick sort of cascades bounce back up. If we do form support above that level, then that could be an opportunity to take the trade. If you are interested in learning how to trade, I do have tutorials below. There's over $16,000 in bonuses if you guys are interested in that. Also, friendly reminder, I am going to be on Debate Crypto tonight at 7:30 p.m. Eastern Time. If you want to go check them out, it's Debate Crypto over on YouTube. And for everyone asking about the MEXC giveaway, yes, we are going to announce those winners shortly. And if you do want, you can still get the 10% off. And they actually have extended it. We're still going to do the first giveaway, 100%. But you're eligible. If you signed up, you can still get involved. They're going to give away $2,500 this time. So we're still going to give it away to more users. If you guys are interested in that, links below in the description. But that is it for me today, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos every single day. I love you. You're awesome. Be safe out there. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. And of course, peace out.